Hi there, I'm Dean Heskin, President and CEO of Swiss America Trading. For those of you who've been tuned in to our podcast for a while now, you already knew that. And you are also tuned in to our podcast entitled The Secret War on Cash, where we take a very hard look at the war that is going on today as we speak on your cash, on my cash, on all of our cash. And as we always do, we're going to be discussing this with my co-host, Chris Agelastos, who's going to there he is, slid right in here this Friday morning. How are
I'm
you today,
sneaky.
Chris? You are sneaky, sneaky, sneaky. Well, thanks for joining us this morning, and we're having to record this one a little early because of my travel next week. And actually, Chris is traveling. He's in the Ozarks right now, even though he brought his living room from Scottsdale with him. And
It
it's
travels
still,
nicely.
it really does actually, very nicely. So thanks for tuning in. Let's get right into it. Actually, a hot topic we're going to talk about today. It's going to be on the gold market. And CC, our producer, I know is going to throw up there right quickly our first little article we're going to talk about. And we've been discussing gold. Between gold and bricks, those have been really the two leading stories, I would say, in the financial world, and just in terms of the progression of things. Many people may not be familiar as much with gold if they're not involved in the market, or bricks if they haven't been following that. But the developments in those two areas have been off the charts. And as a first article reads here, the title of it, gold demand hit a record in Q3, says the World Gold Council. And as you look at this article, and for those of you tuning in, you can click on the link to pull it up yourself. It's actually a really interesting read and pretty descriptive as to what we've been seeing. And what I found interesting about this, Chris, and I've got a few bullet points I'll hit and then let you talk about it. But
Yeah,
the, as you talk about how Q3 was so heavy, this happened while they cite the fact central banks, their buying actually cooled off quite a bit. And the significance of that, central banks have been in the lead in terms of the amount of gold purchases that they've been making. And when I read that, what's interesting, and I think something that really we should all take away from this, is that it really speaks to the breadth of the gold market right now. There is so much demand, there's so much activity that, even if there's a little bit of a lapse in one area or the next, that the demand factor is so broad that it just continues to rally, continues to roll. And another thing, the production of gold actually is up 6%. So, their point being is the supply side of the equation is increasing. That one factor of demand had dipped a little bit, as did jewelry purchases. Jewelry purchases in that same quarter went down. The consumption overall was up. They say five. And I know I'm taking all the thunder here, perhaps from you, Chris, but
no, you're
the
good.
demand leapt 35%, exceeding $100 billion in the quarter, which is the first time that's happened in history.
Yeah,
And, to be clear, what's important to cite about that is, as we talk about record high gold prices, and we talk about this record high demand that we've been experiencing or seeing, but part of that also speaks to the inflationary effect of, the how much the dollar has eroded. $100 billion today is not certainly not what it was 5 years ago. But
correct.
this is very promising. I mean, am I reading this right? Am I getting a little bit drunk on gold success, or is this a reality of our marketplace right now?
No, it's certainly the reality, and I think gold is one of those things that has always been in demand. Certainly sometimes more and other times less, but whether it's central banks or individuals, shoring up their investment portfolio and protecting themselves, there's always somebody buying gold. And that's one of the nice things about it. It's got a consistent, long track record. Now, of course, what we're dealing with now with expected interest rates continuing to cool off a little bit. All the conflicts, especially in the Middle East, currently going on, and of course, as in gosh, the next week here, we've got a presidential election. So there are a lot of factors right now that are spurring, demand for gold one way or another. And we saw that in the numbers this week. We almost hit $2,800 an ounce, which, when we were talking about this a year ago and talking about predictions in the 25 to $2,700 range, people thought we were nuts. I
Right.
even wondered if I was a little crazy.
Right.
And here we
You are a
are,
little crazy,
knocking
but you
on
were right.
right, despite that.
Right.
And here we are knocking on 2,800 an ounce. So, gold is one of those things that it has consistent um, necessity, for different people for different reasons at different times. But it's always been around, at least as long as we've been recording history, and I don't think our generation is going to change that.
Right. Well, and there's been, in fact, in the article, it talks about ETFs and things of that nature that have also
Mhm.
contributed to the demand factor. But that speaks to the point of, just how, like I mentioned, can't say it enough, how broad this market is and how much the demand, even though central banks may have cooled off a tiny bit, there's obviously just this the same dynamic is always brewing in our economy, to your point of the different needs, speaking to the different needs that people have, maybe to diversify their passports and get education. And it's interesting too, Chris, for all these years that we've talked to people about being diversified, so you have balance, so you have stability. It's we really, and this is not something that we really get into all that much at Swiss America, is the fact that a lot of people have been benefiting and necessarily benefiting from the profitability of gold, the growth. And what I mean by that is, like, looking at this year, that 35% increase, as we've covered many times in our podcast here, and anybody tuning in or anybody in this country literally knows about, there is nothing less expensive about living today than there was 3 months ago, 6 months ago, or a year ago. And so those added gains have been a necessity for many to take advantage of, you know, making some money over here so that they can pay some bills over there type dynamic. Or, and if
Right.
not even in reality, meaning like they've sold their gold to do that, they have that profitability there where maybe they allow them to dip into some savings and it didn't really hurt them because they've been able to shore that up with the gains on the other side of it. And that, as we look at the second article here, and the reason I wanted to use this one kind of to piggyback on the first, it's talking about Goldman Sachs and gold, three reasons why surging gold prices will climb another 8%, they're saying, by the end of 2025, according to Goldman. Now, 8%, what they're saying or suggesting is that by the end of 2025, that gold prices will hit 3,000 an ounce. Now, as you just mentioned a moment ago, Chris, gold is knocking on the door right now of 2,800.
Yeah.
The bottom line is that today being roughly a year ago, as we discussed this, we cited numerous sources that we're talking about how when gold again was not even 2,000 an ounce, how they were saying by the end of this year it would reach 3,000 an ounce. And as we said, if they're wrong by half, that's a pretty good gain. That's pretty good appreciation, and we are
Right.
knocking on the door of 3,000. And I didn't have time to research or to look it up. I know Goldman has weighed in on this topic obviously before, and maybe you remember. I don't remember it when
Yeah.
everybody else was talking 3,000 an ounce. Were they one of the institutions or firms out there that were talking about 2,400 or something like that when gold was 2,000? It's going to reach 24. That
Yeah.
seems to stick in my head, but I don't recall exactly. But here's my point. What is interesting, if you look at what we just covered in the first article, one of the things that they cite in terms of this 8% gain that we're going to experience, which incidentally would be in over a year, it'd be a year and basically 2 months. They're citing the fact that central bank buying is what's going to catapult this. That's what's going to thrust the prices into these areas. Well, I found it interesting, just as we just covered a moment ago, central bank buying is actually cooled off a little bit, and yet it's still going. So, like, if that central bank buying ramps up again, then
Yeah.
8% move in the next 14 months. That seems ridiculously low. I don't know what your thoughts
Yeah.
are on that, but I'd like to hear it.
Yeah, I mean, Goldman has historically been a bit conservative when it comes to predictions in the gold price, And I think you're right. I want to say 2450 to maybe 2550 was what they were talking about this time last year, or somewhere in that range. And like you said, look, here we are, nearly at 2800. So for them to say 3,000 again, I think that's fairly conservative. Even though another 8% gain, as most investors' standards would probably be great for most people. So, and they're citing the same things we've been talking about: federal, rate cuts, central bank demand buying, like all the BRICS nations we've been talking about. Obviously, safe haven buying, due to inflation and geopolitical issues and whatnot. But one thing I wanted to point out, because you mentioned ETFs, and ETFs, for those that don't know, it's sort of like an electronic way to buy gold. You're not actually physically holding any metal. You're sort of just investing in a fund that is betting on the price. If you think it's going to go up, you can make money. If it's going to go down, you're going to lose money. But because of the simplicity of it, and a lot of people that maybe really don't understand the difference, they think they're buying physical gold, but really they're not in those ETFs. Because so much of the dollars have been going into those funds, we've actually seen a good supply of physical coins on the market. We have more physical product on hand now than we did a year or two ago when the price was much lower. And what that's done is brought the premiums down on a lot of gold coins. And so I've been telling clients, for at least the last 4 to 6 months now, this is a great time to be buying physical coins, because you can buy at such a closer price to spot than you were able to in the past, even when demand was much lower. So as they're talking about here, if demand continues to grow, obviously physical supply is going to be leaving the vaults as well. That's another thing that can push the price up. So I would tell people, take advantage now, and get into the market. Even if you haven't, maybe you were thinking about it a year ago and you're kicking yourself a little bit, saying, "Well, I missed the boat." That's not the case. It's actually a pretty good time to get in and secure some product that you can hold for the next few years, and protect yourself and also take advantage of these gains.
Right. Well, look, if Goldman Sachs is usually wrong, they're right that the market goes up. They're just wrong by how much. So it is a tremendous time and opportunity for people to get in, even by Goldman Sachs standards. So I
Right.
normally tell people how they could do this, but Chris, tell people how, if they'd like to learn more about gold or how to get into physical gold, what they need to do.
Yeah, probably the easiest way for most of you is just simply to call us, 800 or visit the website, SwissAmerica.com. We've got multiple places there where you can just enter your information to request a packet. We can either email information to you, or we're kind of old school. We still send out hard copies because a lot of people like to hang on to it for reference material. But reach out to us. We're very low pressure. We like to explain to people the different ways you can buy, the pros and cons, and really just help you figure out if it's going to make sense in your situation. And I found that most people, once they have a good understanding of it, it's much more comfortable and they feel good about what they're doing, as opposed to just taking a leap and hoping that it works out for you.
There you go. Straight from the horse's mouth. Thank you, Chris. And for those of you tuning in, thanks for doing so. If you're not subscribed to our podcast, please do so. And you can also follow us on social media. Keep in contact with us. Leave your comments, leave your remarks. We'd love to hear from you. And other than that, Chris, thanks again. We will look forward to talking more about this in the coming days, weeks, and months ahead. And for the rest of you tuning in, have a great rest of your day. Thank you.